So, support and resistance. We're talking about support and resistance with focus on key levels. So here's the view I want us to have on support and resistance. Okay. So we say the market moves in two forms. Right here. So the market moves in uptrends, downtrends, and sideways trends. Now, what is the resistance? Something that stops something from going higher, right? So here becomes the what? The resistance. And the support is meant to support. So basically, if someone is supporting you as a person, he's trying to push you, he's trying to uplift you. So in a bullish market or a bullish trend now, this would be referred to as a support level. Similarly, this is going to be a resistance level. This is going to be a support level. So support is taking prices up, but resistance is pushing it down. In a sideways market, the equal tops are going to be resistance and the downward tops are going to be support levels. But now, this is the basic resistance and support level. And I feel like sometimes it is not described enough that most people just view support and resistance as lines. They just feel like anywhere they draw a line on the chart and price have not passed it is support, is resistance. But they don't really or fully understand why we say we buy from support and we sell from resistance. Now, the idea to sell from resistance and to buy from support isn't to validate your stupidity on the chart to just buy and sell from anywhere. Now, you want to pair your support and your resistance alongside market structure. So say the market structure is bullish. In a bullish market, support levels are needed. There should be more of what you're looking out for than resistance levels. Support levels in market structure, we want to identify them as coming from the higher low. Now, the higher low is your significant area in a bullish structure. So when you identify a bullish market, support becomes necessary. Support levels become necessary. Now, we don't want resistance in a bullish market. We don't want anything that will bring prices down. Now, similarly, anything that is going to bring prices down is a resistance. But in a bullish market, the support levels will always be stronger than the resistance levels. So we just don't want to be taking sells because we see a resistance level. We want to take sells because we are sure that this resistance level is in the direction of the market structure. So similarly, in a bearish market, the support levels are not as valid as the resistance level because we want prices to push lower. We want prices to go lower. So in order for prices to go lower, what do we need? We need resistance levels. So when you're selling on resistance levels on a bearish market, it makes it more valid than when you're trying to buy, because you're trying to buy every support level. Now, in market structure, there's something we call weak highs and weak lows, or strong highs and strong lows. You get? So now, in a bearish structure, okay, we want to see weak lows and strong highs, which are stronger resistance and weaker support levels. And like we said, trading is a game of probabilities. We always want to edge the probability in our favor. So you don't want to be buying on weak lows when you know there are strong highs. So you want to edge that game to play when you are on the strong highs, because you're in the bearish market. So the resistance are more important. So you identify a bearish market and you're looking out for resistance level, makes more sense than when you're in a bullish market and you're looking out for resistance levels. To take trade.
It's like trading against the trend.
You're trading against the trend. So let's make it more clear. We don't want to look for resistance levels to take a trade. Rather, we want to look for resistance level on a bullish market to exit a trade.
Just in case it's not going to continue.
Exactly. So when people are identifying support and resistance levels, they tend to identify them wrongly. Especially when you're basic, when you're a beginner and you're just starting. We tend to identify them wrongly. So people look for every resistance, want to sell at every resistance and buy at every resistance. That's the normal basic thing you're taught. You're taught to sell on resistance, buy on support. But what support exactly are you buying from? Because if you're going to just buy on every support, what if you're in a bearish market? You buy here, take profit here, stop loss here, construct your stop loss. So, me personally, I've looked and scrutinized and I've noticed that most people don't actually explain profit. Even the books you read, they really don't go further to explain how you should apply support and resistance to market structure. So, you want to look for strong lows in a buy situation and focus more on support. You want to be looking for resistance areas as areas of exits, not entries. Except if you want to go counter trend. And if you're going counter trend, I would always advise that you're going counter trend on what? On a higher time frame. You can't be going counter trend on a 15 minutes time frame if the overall trend is bullish. What are you seeing on the 15 minutes time frame that makes your counter trend decision important? Look at the trade we took on Monday when we were trying to take those sales. You could see how it kept breaking and going higher.
It got to the point of
do you understand? Where the actual resistance he wanted to use was there. And sometimes he might not even want to use a resistance. He might be looking for how to create a resistance. Sometimes not every resistance is pre-existing. So for me, I have one thing I call pre-existing support and resistance and occurring support and resistance. If I send you one of my old libraries, you see where I described it. So we have support and resistance that are pre-existing. They are there. But if those support and resistance get broken from a new trend that is happening, it's trying to form its own new resistance. So how do you catch that new resistance that you want to sell? You can use the old resistance and it will break through it. You understand what I'm saying? But it now wants to form a new resistance. Then it will now eventually sell. But if you focus on the buys and that old resistance, money, you focus on the buys and that old resistance, what is eventually going to happen? What is eventually going to happen is this. That resistance that you spotted and you identified that was pre-existing will serve as an exit point for you. So when prices get to that point and you see it start to dance at that resistance that you've identified in a bullish market, you now know that, okay, it's time to take profit from here. Or let me take as good enough profit as I can take from this level. And when you eventually do, what happens? You save yourself from prices reversing against you or taking away your profit, and then you have to panic and then you want to close out, or prices coming to hit you at trading stop and all of those things. So support and resistance isn't just a line. It's not just where prices know. We have to see it for what it is. Similarly, in the bearish market, we want to be looking for resistance to take sales. So you come to the chart and you look at the market and you see that the market is bearish. If you see that the market is bearish in this fashion and it's coming down, you don't want to start looking for areas of resistance. Where could the next place be? Do you understand? Is it going to stop here? And if it does, where is it going to come to? So when you focus on resistance in the bear trend, you stand more chances than when you're focusing on support, because this support is then going to be what? Weak lows, which eventually you get stopped out. Any questions? Marvelous. Understood? Now, we've understood this now, yeah? Now, this one is very easy. We don't need to talk about it. Resistance, support.
Can we also say that those, especially in the range market,
Yeah.
can we call it shoulders
No, you can't call them heads and shoulders. Let's use this now.